Welcome back, everybody. So this particular lesson video series will focus on specifically on-chain metrics. So on-chain metrics refer to data provided by the actual blockchain network itself. It's data pulled and derived from analytics and sources that interact with information that's exchanged on the blockchain. Now, this information is sourced from nodes, which are computers that are running the blockchain program around the world. There are many websites and APIs available for use to specifically pull and report these on-chain metrics. Here are just some examples of on-chain metrics. Some various statistics could include holders making money at current price, so maybe holders that are in profit at the current price. So we see 92% are in profit, 4% are at profit or near their original buy-ins, and then 4% are out of profit or currently at a loss for this particular coin. These are just examples. We also see concentration by large holders. This will vary depending on the settings of how we are determining what's a large holder. Maybe large amounts of Bitcoin, maybe someone who's holding 10 or more Bitcoin, 100 or more Bitcoin, 50 or more Bitcoin. That really depends. But here we see for this specific analytic, we see 42% are held by large holders. Price correlation with Bitcoin, 0.95. So this is a highly correlated. This could be something like Ethereum, which is highly correlated with Bitcoin. And then the holders composition by time held. So in this particular case, we see 59% have held this token for a year or longer. 33% have held for 1 to 12 months. And then 8% have held for less than a month. Now, there's a lot of websites and tools that we can use to get solid on-chain metrics or verifiable on-chain metrics. Here's just a list of some examples that we at FAL Consulting have found useful and reliable. This does not mean it's the only list. There may be more sources. There definitely are. Some can include CoinMarketCap, which is just a great overall source for information, not even necessarily just on-chain metrics, but just various metrics regarding coin market cap and transactional volumes and where the coins may rank in terms of market capitalization. You can see its growth in terms of is it moving up in market cap, and the standings, the top 100 has entered the top 10. This is a great website for that. DeFi Pulse is great as well. This is mainly focusing on DeFi related projects, specifically on Ethereum, but it may include other blockchains as well. We'll dive into more DeFi related protocols and DeFi related analytics later on in the lesson. Blockchain.com is another great one. Overall great source for just overall taking a look at blockchain metrics. Specifically for Bitcoin is very useful. Glassnode is really great as well. Glassnode and Santiment I find are very useful for just tracking general on-chain analytics, whether it's transactional metrics or mining metrics, staking as well. Etherscan is very useful specifically for Ethereum-based metrics. Messari, they're a great company that has that's very in tune and offers a lot of analytics, research-based reports and analytics, specifically focusing on on-chain metrics. Dune Analytics, this is a great website for specifically ETH and ETH-based protocols in the DeFi space, whether it's sales, NFT related, lending and borrowing protocols, DEX volumes. This is a great source for that. Viewbase is great as well, specifically for NFT management and other DeFi related protocols. DappRadar as well, taking a look at decentralized application metrics and the block crypto. That's another useful tool. All of these are useful in different scenarios and depending on what you want to look up in the on-chain space. Now, the first on-chain metric we're going to discuss and dive into is the exchange flow. So exchange flows refer to studies of how funds have flowed in and flowed out of a particular exchange. This includes the exchange inflow, which is the amount of coins transferred from a non-exchange to exchange wallet. So let's say a person has a crypto wallet, maybe like a Trezor or some sort of digital wallet like a Trust Wallet or MetaMask, and they're sending this to an exchange. So this would count towards that exchange inflow. The exchange outflow would represent the amount of coins transferred from exchange wallets or exchange accounts to non-exchange wallets. So when someone takes their coins off of Coinbase and they send it to their MetaMask, this would count as part of the exchange outflow. And the exchange balance. This is the amount of coins held on exchange wallets. This can be calculated by taking the difference between the inflow and the outflow. Simple calculation of inflow minus outflow. So exchange flows is an important metric to follow as it can gauge market sentiment, where high amounts of a coin, let's take Bitcoin for example, if we see high amounts of Bitcoin moving to exchanges or moving to an exchange wallet, this could indicate a potential sell-off in the future. Remember, the exchanges are currently the main on and off ramp for crypto, meaning that if someone wants to cash out their crypto or if someone wants to buy crypto, they typically are going to do it through a centralized exchange such as Binance, Coinbase, Kraken, KuCoin. All these main exchanges, these are where people are exchanging fiat dollars, euros, Chinese yuan, and they're exchanging that for crypto, and vice versa. When they want to sell out of crypto, they're bringing it to a centralized exchange where they can exchange that for dollars and then send those dollars to their bank account. Now, high amounts of a coin, let's say Bitcoin, for example, moving to a non-exchange wallet, they're moving off the exchanges, could indicate that users are holding on, right? Or the user is holding on, causing price increases through supply decreases. So if the amount of coins on the exchanges begins to decrease over time, there could be a supply shortage where there's a more induced scarcity of the actual coin. And as a result, the remaining coins on the exchange will go up in value because there's less of them to buy or to trade. And vice versa, if the supply increases when large amounts of a coin are moving to the exchange, that can indicate a sell-off, right? So people are bringing their coins, they're going to dump them into the market, and then there's more coins around. As a result, the supply has increased. If demand stays the same, we would see a leveling off where the value of each one of those tokens decreases because there's so much more of them available. Here's an example. This is from Santiment. This is in green, we see the price of Bitcoin, and in purple, we see the exchange inflow. So this is the tracking of the amount of Bitcoin that has entered exchanges, right? And we see, particularly, there's typically the exchange inflow remains around this level, right, that I have highlighted, and there's certain spikes in exchange inflow indicating that there's certain key moments where there are more of these Bitcoin being sent to the exchange, which could precipitate a sell-off, right? People are moving their coins to the exchange. Why would you move the coin to the exchange if only but to sell, right? And we do see that there are specific moments where when the inflows are down, right? We see this general down level that could indicate that less people are sending their coins to the exchange to sell off, right? And this kind of matches what's going on in price. Prices are going up, people aren't selling. Now, prices are going down on this particular moment around April 13th, maybe a little bit after April 20th or whatever. We see Bitcoin fall from about 64K to a low of maybe 49K, right? And this was the first sign of a weakening of this general uptrend, right? We see a lower low than the previous low. This is where we start to see that market structure breakdown. Now, at the same time, we see a spike in exchange inflows. This was observed here, and this is actually right before the actual bottom. So it looks like there was a general ramping up of exchange inflows over time throughout March and into April. This is a sign that, well, smart money was seeing that price was going up. We're going to start to sell off. We're going to start to take profits, right? And this is a sign of just general taking profits. People were sending their money to the exchange and selling off at the top. Now, at the time, it's hard to see this unless you have access to certain metrics like this. While Bitcoin would go on to recover somewhat and reach a new high of about 57K, and then ultimately would collapse in 2021 into May 2021, we do see this flash crash coincide at the same time with this general buildup observed in late May of the exchange inflows, indicating that people were taking their Bitcoin off of their wallets, sending it to the exchanges, and most likely selling, right? We don't know that they exactly were selling, but price did come down quite a bit. So, there's much reason to believe that sales were up, right? Obviously, people were selling. People were obviously moving their coins to the exchanges, so it makes sense that people were sending their Bitcoin to the exchanges at the same time that they were seeing Bitcoin continue to crash and plummet. Now, what's interesting here, we do see later on in 2021, there is a specific spike in exchange inflows. This is observed in about, let's say maybe sometime mid-August. We do see this general increase, right? And at the same time, Bitcoin is continuing to produce this general strong uptrend and reversal from the downtrend observed for about 2 or 3 months in 2021, around May, June, and July. At the same time that price is continuing to increase, exchange flows are ramping up, right? Very drastically. And we do see that price not soon after would decline. So one could say that there is some sort of correlation where as exchange flows increase and spike at key moments, that could precipitate or predicate a downtrend in prices. Looking forward, these are the Bitcoin exchange outflows. These are more metrics regarding Bitcoin's exchange outflows. So these are indications of the coins leaving the exchanges. At the same time, we do see there is a general buildup at these particular moments, right? Correlating where when exchange outflows are increasing, we may soon be seeing soon to see some sort of price increase, right? Here we see general increases in exchange outflows compared to previous levels in exchange outflows. We also see here there's generally a large spike. General exchange volume was very high. Lots of people were sending coins to their private wallets. Lots of people were sending coins from their private wallets to the exchanges. So there was a lot of volatility up into this run up of about 50K in early September, right before this general market downturn in September. Now we can also take a look towards exchange flow balance. So this is an example of the general balance of the exchanges. If we see a positive reading, this is an indication that exchanges have a surplus of the coin, in this case Bitcoin, whereas negative readings indicate that exchanges have a negative surplus, or they're in some sort of deficit. There's low amounts of coins. More coins are being taken off of the exchange than being added, I should say. Right, so when we see these negative drops, more coins are being taken off of the exchanges, and when we see readings above the positive level, as we can see on this y-axis and in the purple or pink side, purple-pink column, a positive reading will indicate that there's a positive flow balance, indicating that more coins are being sent to the exchange as opposed to taken off.